Half an hour away from the open in Hong Kong, Shenzhen, and Shanghai. You're watching the China Show. I'm Yvonne Man with David Ingles.
Right, let's get to it, shall we? Our top stories today. Asian equities gaining as the Fed rate cut bets fuel a rush into the riskiest corners of this equity market. Hong Kong stocks are looking to reverse 2 days of declines. The open, of course, 30 minutes away. Also ahead, Donald Trump speaks exclusively to Bloomberg at Mar-a-Lago, questioning whether the U.S. is actually obligated to defend Taiwan. And President Xi Jinping's common prosperity drive reaches Hong Kong, with staff at financial firms asked to return some of their pay.
All right, this is your Wednesday morning action here this morning. It looks like Asia is looking to join, or has joined, on this global rally when it comes to what we saw in the U.S. markets. Basically, stocks notched up that record once again. Gold getting into an all-time high. So, these are sort of the Trump trades we're focusing a little bit more on as well. Although some of those have actually done a bit of an unwinding, particularly when it comes to the bond market. Bonds actually rallied after we saw that retail sales print actually did beat estimates as well over in the U.S. overnight. But the consumer is still holding on well. So that steepener trade turns a little bit more of a flattener here this morning. We're also watching very closely what happens to these tech-heavy benchmarks like Korea, like Taiwan, as you see, continuing the sell-off that we saw in the U.S. Once again, we saw a rotation out of the large cap tech into other parts of the market in the U.S., and certainly that's following through here in the Asia session. We'll watch Taiwan very closely, as we talked about when it comes to gold. There you go. 2,476. That is a record that we previously that broke the prior record, and now we're getting closer, ever so closer, to 2,500. Bitcoin's at 65,000 here right now this morning. And then, of course, we have to focus on this exclusive interview with the former President Trump to Business Week, given before the presidential debate and before, of course, the shooting. But certainly, we heard he laid it all out what comes to the economic policies and what they're looking at. And in particular when it comes to Taiwan, which is very interesting, right? He was cool to the idea of protecting Taiwan from Chinese aggression, right? And everything is quite transactional when it comes to foreign policy, according to this Business Week article. So you take a look at what it comes to Taiwan semi. We're down about 2% at the get-go here, but these are the large caps in Taiwan. Mostly lower here, I guess you could say. But really, we got TSMC earnings coming up tomorrow as well, so maybe a little profit taking there. But yeah, here's a setup to China as well. Of course, with the Trump trade, it has been a bit of a heavy market of late here, just given when it comes to tariffs and the like. Futures are pointing negative here this morning. HS Tech, Hang Seng has also been down for 2 straight days now. We're seeing a deep sell-off there. And there you have it. More of a reminder of what these Trump trades mean for markets here right now. President Trump making yet another appearance at the Republican National Convention in Milwaukee.
Yeah, there we go. So we will be, of course, getting you guys up to speed, of course, in anything and anything material that takes place, of course, out of tonight in the U.S. If you're watching us, thank you for joining us, of course, Milwaukee, then, of course, former president. And as Yvonne is pointing out, of course, we had this wide-ranging conversation with the former president, which certainly the sit-down took place, before, of course, the events on the weekend. Notwithstanding, of course, to mention, we covered everything from is Jay Powell going to continue on as the Fed chair, who he would consider for his cabinet. He said he would actually consider J.P. Morgan's Jamie Dimon to be the Treasury Secretary, among other things as well. He talked about TikTok and whether they should ban that. Yvonne talked about, of course, Taiwan. He thinks Taiwan should be paying for their defense. There's simply not an insurance policy. As it pertains to things like tariffs, for example, we've been focusing on China. He says it's not just China. You look at other countries across the world that have taken advantage of the U.S. So extremely wide-ranging conversation.
He mentioned.
The EU, too.
Yeah.
Yeah.
Yep. So certainly it was interesting to kind of highlight it all in one piece here as voters and even investors are kind of trying to figure out what the economic agenda is going to be in this Trump re-election campaign here. So we're getting a little bit more clarity on that. And let's get more on our conversation with Donald Trump and bring in Derek Wellbank joining us out of Singapore. Derek, what stood out to you the most in this wide-ranging interview?
Well, I tell you what, I think one of the big themes that I'm seeing right now is a lot of investors trying to wake up to the idea of what Donald Trump is actually going to mean and another presidency of his is going to mean. That was my biggest sort of takeaway throughout all of this. It was very specific on what does Trump want to do. If you read this interview top to bottom, you get a really good idea back of the frameworks in case you forgot or in case you're new to the, new to the market since Trump was president. You know, this is a guy who wants to be in a low tax state. He wants to have rates be reasonably low. He likes the idea of that money flowing into the market. Although he was a little bit cautious on the idea of the Fed cutting sooner before the election, said that would be a mistake. Said he would be open to Jay Powell running through his entire term. Who he would pick after that, we would have to see. I do think that the Taiwan comments that you noted are really, really interesting. They're also not fully out of line with what Donald Trump has been saying. If you go back and look at his last terms, where he was calling for NATO allies, especially in Europe, to put in more money and match their commitments to defense spending, where he was pressing South Korea and others to pay more costs for hosting U.S. troops on their shores as a defense mechanism against North Korea and others. So this idea from Trump about that people who would get U.S. military protection ought to compensate more for that is certainly something we saw for 4 years in very stark terms. So I wouldn't read that as out of line with what he said before. But at the same point, I'm very well aware, and you all are too, of how much in the China-Taiwan relationship and when the U.S. is involved, there's a particular focus, especially in China, on the exact words that are being used at any time. Does this comport with the insert deal here and statement there and all of this other stuff, right? There's a series of official words and official phrases that tend to be spoken of all of this time. Donald Trump's not that guy. He doesn't speak that way. You shouldn't be used to him speaking that way. You shouldn't expect him to speak that way. He's a very sort of transactional person, but when he says something about something, you just listen to his words. You don't need to search in the dictionary for dictionary definition number 4 of the English language words that he's using. He is using the words that he's using, and if he sits there and he says, there's an insurance aspect to this, people pay premiums for the insurance. And so, as I say, much like the comments that he had made with South Korea and others, you're hearing some of this about Taiwan. Now, all of that will land in very different ways, and this will be something that people, I think, on both sides of the strait will have to take notice of.
And Derek, on this wall that is being built between China and the U.S. as far as technology, access to technology is concerned, do you think he will take that story forward from what Joe Biden started to do? And maybe related question to that story is, he's also actually in favor of TikTok or having TikTok stay in the market in the U.S.
Yeah, it's interesting on TikTok, right? Because Trump was really TikTok skeptical. He's now on TikTok. Dana White, the UFC head honcho, was actually instrumental in getting Trump onto TikTok, but he's on there now, and he said he likes TikTok. And I would imagine, at least in part, as a counterweight to Meta and others in that space, right? So that's an interesting kind of play there. But the tariff policies that are in place, Trump put a lot of tariffs on China. Biden has extended those tariffs, and I wouldn't really get a read out of this interview or out of Trump's policies that he's meaning to move away from a tariff-heavy place, both as an actual instrument of policy. He thinks that tariffs are tend to be a good idea as revenue raisers, as well as an industrial policy in terms of moving production back into the United States. As well as, candidly, as a negotiating platform, and threatening things that, the initial top line that's mentioned for a tariff may not actually be where it comes out, or it might get put out and it might get reduced down later. All of this is very much in play, the way that Trump has acted, in his last term, as well as the ways that he's talking about going through here. As I say, you read this Business Week interview top to bottom, it really does lay out a lot of that stuff. I would say this is a sort of must study. You know, there have been a couple of pieces out here. This is one of those that's kind of a must read if you're playing in the geopolitical risk space, as I think, candidly, as I've said, every single market participant is at this point.
Derek, thank you. Derek Wellbank with that recap of that exclusive interview with the former President Trump there, joining us from Singapore. Let's bring in Billy Leung now, investment strategist at Global X, and he joins us out of Sydney this morning. Billy, it's good to talk to you. It's been a long time. Let's start with basically this whole Trump trade here right now. It seems like we're seeing a little bit of momentum the last few days, whether it's the dollar, Bitcoin, yield curve steepeners, even gold at some point has a bit of a Trump trade to it. Do any of these, you think, have any long-lasting impact to you?
Yeah, I think in terms of the Trump trade, I think there is a case for it. Obviously, like you mentioned, there's going to be, if a Trump presidency or if a Republican win, there's going to be likely tariffs, there's going to be likely trade policies, which are going to benefit domestic companies and companies with, I guess, limited exposure to international. I've got no issue with the case of this Trump or Trump 2.0 investment case, but it's most to do with the timing. I think what's happened with the Trump trade is that it's been brought forward, and that's due to three things. And I think, you know, we've seen the first thing, which is the presidential debate. We've also seen the Pennsylvania incident, and we've also seen recently the announcement of J.D. Vance as the VP. So I think these have brought forward the Trump trade, but it actually hasn't raised the conviction of the Trump trade case. And that's because we're still yet to see what the potential impact of the trade policies are. We don't have any information, and we also don't have any details of what the tariffs will look like. And to actually complicate things, you know, we also have the September FOMC meeting wedged in between right now to the November election. So I think right now there's no issue with the case of the Trump trade, but it's more to do with this trade being quite premature right now.
Billy, David here, you make that's a very good point you're making, in a sense that, you know, the Trump conversation is literally happening at the same time as the Fed conversation around September, and I guess it's always very difficult to disentangle the two things. And one of the things we noticed overnight was this broadening out of the tech rally. The NASDAQ 100 was essentially flat. The Russell 2000 was through the roof. Do you think that broadening it out within the tech space, do you think that continues, or should I stick with the big AI winners?
Yeah, so I think we definitely more the latter. We are still of the view that the big, innovative, high growth, especially quarterly growth companies will be the outperformers going forward. And I think our reasoning for this is because during a period of rate cuts, going into and going out of rate cuts, you know, this is a reflection of slower growth and also slowing inflation, which means that pricing power is actually lower. So what this also means is that it does not bode well for smaller companies or value companies to an extent. So we do have a preference to large growth and higher quality names as well. And to go to your point about the Russell 2000 outperformance or the small cap outperformance, we still need more data. I think, you know, it's only been about a week of their outperformance. And if you look at the more concentrated large cap outperformance, that's been ongoing for quite a period of time. So, you know, I think this is also a matter of seeing more data. And I think lastly, something that I'm suspecting is that we are now entering into the major innings of the S&P Global, S&P 500 earnings season. So I think there could be some inaction for the big names, especially ahead of these earnings.
And you mentioned earnings. I mean, the expectation seems to be that profit growth is going to fade among some of these AI plays now. Is the industry losing that fundamental support?
Not really. I think you're correct in saying that still the Mag 7, so to speak, names are going to be the key drivers of Q2 numbers. We're looking at Mag 7 net earnings to grow about 20 to 30% year on year for Q2, while the rest of the S&P or the S&P 493 are going to be more flattish in terms of Q2 growth. But the thing is, if you look at the remainder of the year, for example, Q3 and Q4, we're going to see a much more balanced growth between the Mag 7 and the remaining of the S&P, and that's because of Mag 7 going to high base and the other names going to a much more lower base. So we are going to see into a much more balanced second half in terms of earnings growth. But you're right, Q2 will be mainly driven by the key Mag 7 names.
Billy, in your previous life, you covered more closely, of course, Chinese tech. So I have to tie in the AI conversation to what's been happening here in Hong Kong, and just this really, this whole universe of stocks that's become extremely cheap in some sense, relatively speaking, to history. Do you think the market is cheap, number one? And what is the best AI play in China, you think, if there is one in your view?
So I think in terms of chip, it's it's a hard question to answer right now. There's a lot of moving parts in terms of the Chinese market, but in terms of actual preferences, in terms of AI play, or should I say technology play, we still have a strong view on Tencent, which historically has been one of the key leaders in social media in China. We're also seeing strong games pipeline and strong games performance as well. And in terms of, like you mentioned, the valuation of Tencent in terms of risk reward, it's quite favorable at this moment as well.
What about when it comes to TSMC? They come out with earnings tomorrow. What are you going to be looking at the most in these set of earnings? And are they still the best AI play in the Asia Pacific?
I would say they were one of the best AI plays in terms of the earnings. We've already seen the pre-released earnings for the revenue, which has been quite good. So right now, I think the key focus now is A, are they going to raise the full year guidance? 2, what are their margins, what's margin going to look like? And 3, what are their views on the AI? And I think these are the 3 questions that the market or the analysts should be asking. And in terms of my view, it looks quite positive considering that there's likely going to be a hike in their wafer pricing, and there's also going to be very strong demand from NVIDIA, as they have mentioned previously as well. So in terms of outlook, I'm leaning to positive for TSMC.
Billy, it's nice to speak with you. Let's do this again. Billy Leung, investment strategist at Global X in Sydney for us. Some breaking news to tell you about right now. Okay, Nomura is reshuffling its investment bank, and I'll get to what you're probably wondering in just a few seconds here. So we're looking at Patrick Kwan, who's the head of investment banking for Asia, if you strip out Japan, is leaving the firm after more than 2 years in the role. Now, to the question you're probably asking yourself and you're wondering, how many jobs are going? So here's a number. 10 bankers, about 10 bankers this week are about to lose their jobs. New round of job cuts, including 3 MDs. That's according to people familiar with what's going on. We've reached out to Nomura. They have declined to comment on the jobs cuts specifically. Again, role changes will be effective July 17th. That is today. Nomura, the latest one, of course, to be looking closely at their investment banking assets and complement, given, of course, I guess in many ways, the big picture is the drying up of deals so far that hasn't quite come back in a large way.
Yep, we'll continue on that story coming up here. The stock not really reacting to this breaking news right now. We're seeing the share is still up about 2%. But meanwhile, we're talking a bit more about the Hong Kong financial industry as well. According to our scoop, Hong Kong employees at some of China's largest state-backed financial firms reportedly facing pay clawbacks as Beijing's austerity drive ramps up. While the details coming up, you're watching The China Show.
Welcome back. You're watching The China Show. The Chinese president's common prosperity push is spreading to Hong Kong, with sources telling Bloomberg that executives at state-backed financial firms are being asked to return some of the money that they were paid. Let's bring in Stephen Engel, Chief North Asia Correspondent. How deep are these clawbacks?
Yeah, that really goes over well, doesn't it? We want some of that money back for the lack of deal-making on our part and the overall environment right now. We all know that Wall Street banks and financial firms here have started doing job cuts, not only in Hong Kong but around the region. We've also seen, since Xi Jinping did common prosperity as a really signature policy back in 2021, state-owned banks and financial institutions have been cutting staff. I think CICC last year cut some senior bankers cut pay by some 40%. Also, basic salaries at CITIC Securities down about 15%. So we've seen this, confidence-destroying moves, if you will, within the financial sector in China. But it hadn't necessarily hit the state-owned financial services companies here in Hong Kong until now. Sources saying some Hong Kong-based executives and even former employees at China Everbright, also China Huarong International, among others, have been asked to pay back part of their past bonuses in recent months. Now, it's not a large amount, according to these sources, about 10% of bonuses at China Everbright is one example, but it certainly sends a sobering message to the financial services sector. You just mentioned the Nomura news about the head of investment banking, Patrick being shown the door, as well as 10 other executives, including 3 managing directors. This is more reflective of the overall lack of deal flow. There's no underwriting really of notable size happening here. So that's the Wall Street banks and the Japanese banks, Nomura being in that camp. But now state-owned enterprise financial institutions from China also doing a similar thing, but clawing back bonuses, even from past employees, is something new.
I can't imagine getting that memo. What does this mean for the plenum? I mean, obviously, this is part of this, what we've heard before, crackdown on hedonistic lifestyles, common prosperity. Are those themes going to make a return?
Absolutely. I think it's being discussed behind closed doors in Western Beijing right now with the top leadership. We're not getting a lot of news flow coming out of Beijing because, again, Xi Jinping will be issuing his work report. It's going to be all about self-reliance. I mean, the whole Trump news and the momentum there just raises the specter of potentially more protectionist measures. So self-reliance is a big thing. But again, that signature policy of Xi Jinping since 2021 has been, common prosperity, and that has hit the financial services sector, and we're going to likely see more adherence to that. We're already hearing, South China Morning Post is already reporting that Xi is asking party members basically ensconced in that hotel in Western Beijing to show unwavering faith in his reform plan and also, fulfillment of that reform plan. So that includes what the anti-graft agency in China was out with a report, I think at the end of last year or early part of this year, basically lambasting the financial services sector in China for its hedonistic ways. So that kind of tells you where the tide is moving.
Steve, thank you. Stephen Ingles there, our chief North Asia correspondent on this Bloomberg Scoop. We got plenty more ahead. This is Bloomberg.
Right, welcome back to the show. The approach to the open is really, I think, flat in terms of the slope here, although you are getting a bit of a push back into tech. I mean, keep in mind, right, big tech in the U.S. and big tech in China have effectively decoupled. So what you get as far as U.S. tech is concerned might actually be a blessing in disguise for Asian tech. We'll talk more about that in a moment. But generally speaking, of course, this is the approach into the open today.
Yep, taking a look at analyst actions here for you today. And certainly there's been some on the property space. China Wanka A shares cut to accumulate at GF Securities. CGT duty-free H shares cut to a hold at HSBC. And Baidu now cut, I think, that price target, given that softer than expected advertising revenue. They also talk a little bit more about the weak fundamentals there when it comes to the company. That price target now cut at 141, and join the likes of Citi and Morgan Stanley this week in that cut. This is the Bloomberg in China Open.
Okay, good morning. Welcome back to the China Show. We're just under a minute away from the opening bell. I'll look at the agenda for today. So a lot of sectors in focus. Crypto, because Bitcoin 65,000, gold 2,500 for gold. Auto stocks have been rallying. Generally speaking, it's a 4-day rally onshore. It's a 2-day drop in Hong Kong. Although, just keep in mind, we have seen a pickup in southbound flows coming into Hong Kong. Especially yesterday, the biggest net buying from mainland investors going back to about a month or so. So a lot to watch, of course, Yvonne, as we go into this open today.
Yeah, certainly one to watch. And really, how long does this Trump trade last, right? We've seen a little bit of a winding of some of these Trump trades when it comes to yield steepeners. That's concerned. But, really selling China seems to be one of those key trades here right now, as, of course, we count down to this election. And certainly there's a lot on tap here with the plenum. We're hoping maybe to hear a little bit more towards the later part of this week. Yeah,
when they come up with that statement, and is there anything that investors can sink their teeth into? We're looking at a lower open, as you can see on your screen, to about a 10th of 1%. Conversations, by the way, so certainly let me just add to some of the sectors we're tracking as well, so things like brokers also. On the back of this studies, both from the Shanghai and Shenzhen exchanges there, on maybe fee collections as far as high-frequency trading is concerned. You had a big rally into the close yesterday, particularly when you look at small caps, or reversal. Let me describe that more accurately, going into today. So we're looking at 4 days of gains, but as you can see, we're seeing some weakness right now. It's been the opposite that we've been seeing in Hong Kong, where it has been a 2-day drop, in fact, a very steep 2-day drop when you look at some of the tech shares as well. And we've been talking about this yesterday, right? And a case in point last night, this decoupling completely of Chinese tech and U.S. tech, where that correlation has gone effectively to negative right now when you compare QQQ and KWEB. In fact, case in point, again, overnight, KWEB actually closed lower as the rally broadened out in the U.S. Anyway, we can talk more about that later. 1% higher in HS tech. So we, again, what's good for the Chinese tech is really bad for U.S. big tech, right? Big tech drop, HS tech's on the way up. A look at some of the big movers, bottom of your screens. A couple of stocks which, here's an interesting story. Okay, give me some time on this. Nongfu Spring. On Monday, the Hong Kong Consumer Council came out and effectively said they found a little bit too much of something in the water. They had a range coming out, and then the stock dropped. Nongfu then came out and said, hey, here's a lawyer letter. Please apologize and please clarify that misleading review. Again, in response to that, then the Consumer Council came out and said, okay, fine. Your water is okay to drink. It's a pass or fail. So you do a blood test, right? There's a range of findings. At some point, it's not healthy to take it. What the Consumer Council said, yeah, it's fine to drink. That's according to the Standard newspaper. Shares are up 1% after the 3% drop yesterday. Gold is up, and of course, we're looking at, May 2 is actually one stock we're tracking to on the back of Bitcoin at about 66,000. Okay, very quickly, we'll talk more about this in a moment, but certainly with the downdraft we've seen of late on the onshore stock market, we've seen a pickup in turnover and volumes on some of these ETFs that are favored by the national team. So we're looking not just on price, but also what's going on, Yvonne, underneath the hood for any signs that the national team is coming in to stabilize this market for now. Again.
Yeah. We're going to get to Rebecca Sin in a moment. She has a figure here on exactly how much support we actually might get from this so-called national team coming up. But first, I want to bring in Charlotte Yang, and Asia equities reporter, to talk a little bit more, because obviously we've seen Chinese stocks struggle of late. We're getting into the plenum. Not a lot of expectations. People are looking for strategies. What are some things that are actually working right now?
Yeah, so, despite, Chinese shares actually not doing well over the past year, this classic hedge fund strategy, long-short, is actually doing quite well in this market. And, despite the long-short strategy underperforming like market benchmark in the U.S. and Europe, and among the reasons for the success of this trade is the high dispersion people are seeing across sectors for Chinese assets. You're seeing this wide performance across the sectors at this stage, boost industrial capacity while consumption and property struggles, and also the market structure, which is you're seeing some, a lot of high retail investment, retail investor participation, and also not enough research coverage. That actually helps with boost some of the alpha generation as well. And also, investors are saying that they expect this strategy to do well, so long as we don't see, this microstructure remains, and we don't see, the mass stimulus boost from the authorities.
There's this other story unrelated to that, but the bets that rates are going to come down even further in China have boosted the bearish bets on Chinese banks. What do we know, and what are you guys seeing there?
Yeah, so on the options side, everything's actually been pretty quiet lately. But what we're seeing is that the bearish options against Chinese big banks have actually been quite active. And so, for example, if we look at China Construction Bank, you're actually seeing, the bearish, the put options relative to call options have actually, the ratio has surged to a 10-year high. And that's actually showing that a lot of the investors or traders we talk to, they're worried about this easing bias from the PBOC to support the economy. That's actually going to create more pressure for the banks' margins. So that's why behind the bearish bets a lot of
Charlotte, very quickly, what are we seeing as far as state support from the national team? Are we seeing any signs of that? Just very quickly.
Yeah. So yesterday afternoon we're seeing some trading volumes, trading turnover in terms of for the ETFs that favored by sovereign fund actually seem pretty active. So I think that's a sign people are watching for if we're going to see more support as this big meeting carries on. Okay,
Charlotte Yang, there, our Asia equities reporter here with us at the opening bell. Let's bring in Rebecca Sin, of course, who covers ETFs for us for Bloomberg Intelligence, and just to, I guess, answer the question, Rebecca, how much do they need to do on the ETF space to support the market? You've run a piece on this.
So what we have calculated is that they've currently bought $50 billion worth of ETFs in mainland China. But our expectation is that this number can go as high as $100 billion. And the reason why is, I don't know if you know this, but the Third Plenum actually started in 1978 when Deng Xiaoping announced the opening and reform policies that changed China and brought 800 million people out of poverty. And so this is a significant time. And what we have found is that the national team would historically come in and intervene either when, one, investor sentiment is poor, or when there's an important political meeting, which is happening right now. And so our expectation is that they can buy more. And we've tracked a few indices that they are tracking. So, for instance, the CSI 300, which they have bought in the past, we found that if it drops below 3,300 or goes below that level, they'll usually come in and intervene. But they usually won't push it much more beyond 3,600. Another index that we track is the SSE 50. We notice that if it drops below 2,900, that they'll come in and intervene. And so the four indices that they track are the CSI 300, the CSI 500, the CSI 1000, and the SSE 50. And we've noticed that as the market moves and as these indexes drop, that they will come in and intervene. And an interesting fact is that there is no cap for them on how much they can buy, because ultimately this national team purchase is backed by the Ministry of Finance. And so they really do have unlimited supply.
Yeah, you mentioned in your report that it's hard to see any sort of organic growth come through in the ETF market in the next few months or so, but you're seeing a bit of divergence between onshore flows and offshore. What's it telling you?
So I think what it's telling us is that the onshore is ultimately supported by the national team. So if we look at the onshore ETF flow, they roughly have purchased roughly $70 billion. So only $20 billion of organic flows, excluding the national team. But if we look onshore, David, you mentioned KWEB. They're mainly seeing outflows. KWEB is the main ETF that the foreign investors outside of China use to track the Chinese market. And so I think the investor sentiment between onshore and offshore is painting a very different picture. Offshore, we're seeing roughly $2 billion worth of outflows. And especially with a potential Trump president coming back in, you may recall when Trump was in president, there was only outflows in mainland China. We didn't see any inflows into that. And so the geopolitical tension between a potential Trump president and the China sentiment could continue. And so we're expecting more outflows to continue, especially for investors offshore. And a lot of that flows we're seeing actually shift into other regions like India and Japan.
Okay, Rebecca, thank you so much. Rebecca Sin there, who covers ETFs for us, our ETF analyst at Bloomberg Intelligence. Of course, my co-host on the Tiger Money podcast. Right, away from ETFs and maybe a bubble there to something where there might be growing. Bubble tea, there we go. We'll be hearing from popular beverage chain, Yvonne's favorite, I think. Is it?
One of mine,
okay.
Yes.
HEYTEA. As they set their sights on France ahead, of course, of the Paris Olympic Games. And check out that line. Right outside, of course, one of their stores, if you will. Okay, that interview is coming up next. This is Bloomberg.
Welcome back. You're watching The China Show. Let's talk more about, of course, the Chinese consumer, and certainly we're watching this milk tea craze of late here. How does it kind of fit into the whole consumption picture here, just given what we saw in that June retail sales number that did show that demand was remaining pretty subdued here in those June figures. One bright spot, though, you gotta love milk tea, right? Sales growing by 25% annually here over the past 5 years. One of those leading brands is HEYTEA. You've heard about them, right, Dave?
Yeah, no, I've seen them. I'm lactose intolerant, but I...
Are you?
No, I'm not, actually. I don't know, I'm lying on air. No, so the company is backed by Tencent, Temasek. It has around 4,000 stores across more than 300 cities. Ignore me, by the way. It recently opened a pop-up store in Paris and, of course, looking to expand further overseas, and, of course, already quite a big footprint overseas. They're valued at more than 60 billion renminbi in 2021. I believe this should be based on their latest, or the last, funding round. Let's bring in Yujia, Vice President at HEYTEA. He's here with us in the studios. Good morning and nice to see you.
Nice to see you. I'm Yujia from HEYTEA. I'm the Vice President of HEYTEA.
Okay. Are you guys making money? Are you guys profitable?
Oh, it's a question I need to... yes, I think we did quite well. And whether we make money maybe depends on our customers. Yeah.
Oh, depends on the customers. No, but are you making Are you making profits at the moment?
Oh, I'm not
overall.
I'm not the right guy to answer this question.
Okay. Okay. Should we talk about the China business?
Yeah, I mean, tell us a bit more about the strategy behind the global expansion. Obviously, what you're looking at domestically in China is a weak consumer.
Yeah.
Tell us a bit more about. I mean, there's so much competition in mainland China as well. I mean, I think there's 420,000 stores nationwide. Is overseas expansion still the only way to kind of, I guess, get out of this weakness in onshore right now?
Yeah. Firstly, we think the market in China mainland is still quite good. Now we have more than, according to a recent survey, I mean the industry report, by 2025, the market size of China's new style tea should be like 27 billion US dollars. This still could be a very big market. So we are quite optimistic about this huge market. And HEYTEA, we are already still be a pioneer in this industry. So we are quite confident about this market, and I think we could already did quite well. And for overseas market, we recently, I mean, after 2023, we expand to many other countries. Like in August last year, we entered UK market, our first store in London, Soho. And secondly, we have other stores like Canada, Australia, and also in last December, we have our first store in New York, Manhattan. It's Broadway store. It's still big sale. So for HEYTEA, we are also quite confident about overseas market because our brand, our product is really welcomed by local customers. So we did have the confidence also in the overseas market.
Right. What is your projected growth target overseas? And how fast also is your domestic business growing? I just want to see and compare and contrast your rates of growth domestically and overseas.
Currently, frankly speaking, we are now still do some estimate of the market size overseas because we just begin our footprint out of China since last August. And now we did quite well. In London, we have 6 stores. And in Manchester we have 1, so it's already one of our country. Some countries we have the largest number of HEYTEA stores, and now in U.S. we are still quite small. We have 2, and we have more stores like Beverly Hills, in Los Angeles, Rodeo Drive, and other stores like in Seattle, San Francisco Bay Area. So for market size, I think we could answer about this later. But now we are quite optimistic, and we think we really did quite well, and customers like us.
Yeah, it's a smart strategy to go abroad. I mean, there's so many people that are interested in milk tea right now. I want to focus more on the onshore markets here in some ways because we talked about, I mean, you could kind of go to a shopping mall within like a 1-mile radius, and there's probably dozens of different competitors just like yourself. Is the market too crowded in China right now?
Yeah. Currently, we pay more attention to our product quality. And I think the customers like to vote by their bills, by their budget. So we pay more attention to our product quality. We use a real tea, real milk, real sugar, and real fruit in all of our products. That is our promise, and we always deliver our promise. And also, mostly, I think the customers of HEYTEA, they are Gen Z customers. They like some products that could be more useful and trendy. So we also have some brand activities, like we have crossovers with Fendi last year, and also with Barbie last year. The sales is good, and the consumers, especially Gen Z, like us.
Right. Yeah, you mentioned that the consumers like you. I'm wondering how much of your success is down to your brand and not simply pricing. In other words, if you were to raise your prices, how much do you think market share you'd be able to keep?
Yeah. Currently, our price now should be like 15 RMB to 19 RMB. It's our average price. And still, it's quite affordable to the consumers here. And also, we could like to have a better presence to HEYTEA. So, I mean, the activities, I mean, the branding, and also we really pay more attention to what they like. So we do some research that could help us to meet the demand of customers.
Are you priced above your competition?
They're more premium.
They're more premium. Do you think you'll be able to raise your prices?
no, currently we think the price here, just I mentioned 15 to 19 is okay. Yeah.
Okay.
What about in terms of opening stores in the mainland? Is that something that you're still planning on the next year, or a few years?
Yeah. This year we already opened, should be like 900 stores already, some number like this.
Wow.
And we also keep expanding in China mainland, and the customers really like us.
How many drinks do you sell? I'm curious. You're such a big operation in China. How many drinks do you sell a day across all your stores in mainland China? Do you have a number?
Yeah, I can't say the precise number, but we have...
On average.
Yeah, we have some series, and the series I could name to you.
Yeah.
And in 2012, we created the first ever cheese tea. Yeah, just in Jiangbian, Guangdong. It's a
you guys were the pioneers with that.
Yeah, it's 12 years already. It's cheese tea. Now, we still have the series like cheese tea product in our portfolio. And also we have cheese fruit tea, like grape boom. That is really sales is still good, our best-selling products. And it's another series, also mango, strawberry, mulberry, etc. And it's a major category of HEYTEA, the product. And also we have bobo tea. Yeah, it's a milk tea with bobo on the bottom of the cup. It's another series.
Right.
Yeah.
You didn't answer my question though. How many drinks do you sell on average a day in China?
It depends on different stores and depends on different market, and also the customers of different market is quite different.
Okay.
There's no very precise number. Yeah.
Fair enough.
I'm just wondering, in terms of the business model, obviously it works in China. Can you apply the same sort of business model abroad when you're opening a store in Paris, for example, here right now?
Yeah. Firstly, I think for Paris, of course, there's Olympics, and we want to show ourselves to the world, especially tourists from over the world. And also for us, it's also a test water for HEYTEA, because we never been to European mainland before. Yeah, it's the first time we show in the European Union, and still the feedback is very positive. So
what are the challenges then that you're seeing expanding abroad?
Yeah, the first thing and also the most important thing is, if we are welcomed by the local customers, that is what we estimate about this market. For example, in UK, in last August, we opened the first store in London, and I think it's a very example for us to show ourselves, and the sales is very good. Now we have 6 stores now in London, and so because we are confident about this market. But for Europe mainland, you see, it's another test water, and now. Currently, we already gathered some feedback, and the sales is good. A customer like us, they post Instagrams, and also, there's some influencers also came to our store. So currently, so far so good.
Final question: are you looking to raise money? Any fundraising plans? When's the next round of funding?
Yeah. Currently, we didn't have any fundraising plan or IPO. Previously, in 2021, yes, we have some financings there, and now we have strong shareholder base. You just mentioned names. Yeah.
Okay. Yeah. Temasek, Sequoia, and Tencent.
Yeah.
There we go. Of course, Yujia, their vice president at HEYTEA, talking about, of course, their overseas expansion plans. Plenty more ahead here on the China Show. Welcome back. You're watching the China Show. We're taking a step back because we've noticed a pattern that's really gained traction recently, particularly this week. So when you had U.S. equities hitting record after record, we didn't see that mirror in the Asian session with China. And as you can see, and again, case in point overnight, right, when you had this broadening out in the tech rally, KWeb, which is a ETF that tracks, of course, Chinese internet names in the U.S., actually closed lower. And what's happened this week is you have the 40-day correlation between QQQ, that's the one that tracks the NASDAQ 100, and KWeb actually dropped to negatives. In other words, behaviorally, these two are treated differently. They act differently as far as price action is concerned. Now, can that continue is another question altogether, but certainly that is an observation as far as price is concerned, right? So what might be good for U.S. tech might not be good for China, and obviously vice versa, right? So in days when you have negative U.S. equities, you do have, of course, you tend to get a rally in Chinese equities. Right. Now, how does this fit in then to how cheap Chinese internet and Chinese tech stocks have become, right? So as you know, a lot of the conversations Yvonne and I have on the Chinese equity market recently, you know, the preference has been almost consistently large cap Chinese tech. That seems to be where the preference is, where earnings visibility is perhaps the best as well. On a valuation basis, though, when you look at this, Chinese tech is now trading on the same multiple as global value stocks at about 14 times earnings. So, you know, this notion, Yvonne, that we talk about a Chinese tech trading almost like value stocks. Well,
yes.
The numbers tell us that, right?
We've been there before. I remember talking to some of these analysts about that, but certainly we've reached that milestone once again. Yeah, we're taking a look at in terms of other markets here and what else is moving this morning. And obviously we're tracking what goes on onshore and offshore. It looks like things are pretty flattish in Hong Kong, but we continue to see at least HS Tech is buoyed a little bit higher here, and we're snapping out of 2 days of pretty heavy losses in the mega cap space, as Dave had mentioned there. Chinese 10-year yields are actually catching a slight bid here, maybe just given the weakness that we see in the data of late. Obviously, what we're seeing in the equity markets, so a bit of a rotation back into bonds here this morning. 728 for your currency here this morning. We're watching some of these Saudi ETFs as well. Of course, we talked yesterday to CSOP about them launching these two ETFs yesterday. We're starting to get a little more traction here on day 2.
Yeah, perhaps the first full day at school after, of course, it was, I wouldn't say shaky at the open, but, you know, it will take time, of course, for these strategies to really get them running. And certainly it is the same dynamic we saw with the one that was traded here in November last year. It took a while for things to actually gain some momentum here.
Yep, coming up, we got the principal asset management, also talking a bit more about geopolitics here, as well as Trump with Warwick Powell from Queensland University. Welcome back to the China Show. Here's a look at the CSI 300 just 30 minutes into the session here. Not seeing a whole lot of conviction across these markets. Of course, we're still tracking day 3 of the plenum. We're also watching very closely these Trump trades, of some of which have unwound overnight. But still, when it comes to, you know, the China weakness and really the threat of tariffs, that certainly is still weighing on investors' minds here today. So we're still lower on the CSI 300 after 4 days of gains. HS Tech, I think, from last check, was doing a little bit better from what we saw in the last 2 sessions or so. Oh, never mind. We're seeing now a 3rd day of losses. Yeah,
there we go. And certainly not a lot of risk appetite out there. And, you know, the Trump conversation has really showed up in these Chinese markets this week, right? And, you know, it's also showed up volumes in the ETFs that counter, of course, the narrative on that downdraft onshore. Right. The rest of the region, and you have to thank, again, the likes of Japan and particularly Australia for this as well. Now, just to also mention, we did get on a macro sort of from a macro perspective, inflation, which came out of New Zealand, which came in actually at a 3-year low. That's probably one of the market-moving things today. Apart from that, you know, dollar-yen, you know, you look at some of the BOJ accounting. I think we dropped this story yesterday. It looks like they did intervene on Friday following the drop in the dollar to hasten that move as well. But, yeah, we're still at trading at 158.47. Apart from this, though, it's extremely, extremely quiet out there. I'm looking at volumes on the lighter side of things. In fact, we're 10% lighter than usual for this time of the day across the region.
Yep, and we're still tracking what's been going on with this exclusive interview that Bloomberg Business Week did with the former president, Donald Trump here. It was very interesting. We talked about how wide-ranging it was, everything talking about how, you know, he expects and he would allow Jay Powell to continue through his term if he wins. Obviously, there has been a lot of debate about when he was president back then about whether Jay Powell should be taking that Fed chair spot. But everything from, you know, lower taxes, less regulation, harsher tariffs, that certainly, or at least harsher tariffs not just on China, but broadly speaking around the world as well, that he talked about, too.
He talked about Europe in that breath.
Yeah.
On the Powell conversation, I think he said, yeah, I'll let him finish his term, but whether or not we get him on for another term, that depends if he does the right job, right? And I think that might mean lower rates. In fact, to your point, when Wall Street is warning that Trump 2.0 could mean higher inflation, he says, no, that's far from the truth. I want lower taxes and lower interest rates, right? Yeah, let's dig deeper into this wide-ranging conversation with Donald Trump. Of course, it's an extremely long piece. I recommend everyone to read it, of course, here on the Bloomberg. Let's bring in Jill Desis, who's here with us to help us unpack some of the aspects to this. Why do we start with high rates, and he thinks lower rates is actually what is perhaps best to characterize his Trump 2.0 in case he takes the White House again.
Yes, David, we saw him say that, obviously, this idea of maybe running contrary to what I think, the general conventional wisdom has been, which is that rates would be higher. Although he did say, David, that he wouldn't want the Fed to cut rates before the November election. I mean, how much of that is self-interest, I think, is a matter for debate there. But look, like Wall Street right now is obviously pricing in 2 rate cuts by the end of the year that would presumably entail 1 before November. I think, at this point, maybe September or so. But he's saying, yes, don't even look at that until after the November election. I thought that was a particularly interesting point there. And when it comes to the Fed, and then, yes, as you said, I think, really pushing back on this idea, that he would just kind of oust Powell in some fashion. He said, certainly could stay on through the end of his term in 2026. But as you said, the future from there, if he does a good job, I think he's still kind of holding on to some of those Trumpian ways of really the way that he, kind of dealt with the Fed in his first term.
Yeah, the Trumponomics, as we call it in the story. The comments on Taiwan, that he was cool to the idea of protecting Taiwan from any sort of Chinese aggression. I mean, what more did he say about that? Because that would be a pretty dramatic shift in U.S. foreign policy.
Yes, Yvonne, I think to say the least, that would be a very dramatic shift in terms of how, the U.S. ultimately sees Taiwan. So what he said was actually not super different than the way he's treated a lot of, say, the U.S.'s NATO allies, right? It kind of comes from this idea, this economic grievance of the kinds of, places, regions, nations, economies that the U.S. stations troops in or provides some kind of, protection for. They need to provide some kind of, reimbursement for that, some kind of compensation. So monetary compensation, obviously, I think is what he's referring to. So when he's talking about Taiwan, he kind of seems a bit ambivalent about the idea of the U.S. continuing to protect Taiwan. I think had some comments in there about, we should be creating semiconductors, not just them. They've gotten very wealthy off of that. But yes, I think ultimately kind of implying there that Taiwan should pay the U.S. For stationing troops there and keeping, and sort of keeping the peace. So certainly some fairly dramatic comments there from Trump.
And back to the domestic part of the conversation, but still globally relevant. So he talked about how he's considering as Treasury Secretary Jamie Dimon, and separately on what does he say about TikTok and whether or not he plans to ban or keep TikTok.
Yeah, so at this point, on those TikTok comments, I think kind of in line with what we had heard from him earlier this year, but ultimately that he would kind of allow TikTok to, remain having its Chinese parent ByteDance. This is obviously a pretty dramatic about face from where he stood during his first term in office, where he did, sort of rail against TikTok, was supportive of, maybe separating that out. But this time around, he's basically saying that this is actually more of a matter of competition, that Mark Zuckerberg and Facebook and such shouldn't have broad control over how a lot of these tech apps works. And so he's kind of running counter to this and saying actually it's pro-competition to keep TikTok in the way as it is. I think, a pretty unusual set of circumstances here that kind of lead to a very interesting stance on China all around from Trump.
All right, Jill. Thank you. Jill Desis there, our news desk editor, with the latest on that exclusive interview with the former president. Joining us now is Todd Jablonski, Global Head of Multi-Asset and Quantitative Investments at Principal Asset Management. Todd, it's great to have you on the program. Obviously, we've been tracking a lot of these Trump trades. Is it time to actually start really getting into them, you think? Or, and when you take a look at what they are, whether it's the dollar, steepeners, even Bitcoin and gold, do any of them make sense to you?
Well, we're bullish on the U.S., and we've been overweight on U.S. equities for a period of time. And potentially a Trump administration, in our view, doesn't disrupt the forward momentum of big cap tech in the U.S. If anything, we think that the Trump administration would continue some of the positivity that have been moving markets. I do, however, note that the gold trade has been taking off. Yes, it's an area where we've also found opportunity. We also like long-dated treasuries as a hedge, just in case the markets react in a sideways direction.
Right. So Todd, what do you make of the move last night where you had small caps outperforming large? I mean, it is just one day, but I'm wondering whether or not you think, well, I guess I know what you think based on what you just said, but do you think there is a chance, actually, that the rally does broaden out beyond the big AI plays?
I certainly do. We are underweight small caps at the moment, in particular, because those small caps are more exposed to floating rate debt and to shorter maturity floating rates debt. And as we get towards higher levels of interest rates, we are expecting to see the Fed cut about 6 times in the next 18 months. That nonetheless, I think, puts a bit of a headwind towards small caps. I do think, however, you'll start to see that broaden out as the benefits of the AI spending and the tech boom really flow through to some of the value sectors that have been ignored, particularly financials, industrials, and we saw some of that action in utilities as AI enthusiasm arrived this year.
How do you see these, once we do see these Fed cuts play out? I mean, most have said maybe it's really bonds that benefit the most. How are you looking at fixed income overall compared to equities now?
We're neutral on total fixed income. Now, interestingly, what's the role of fixed income? What do we expect from bonds? We expect stability, and investors also expect income. The income has been here now that we've reset to higher rates, but the volatility in those rates has meant that stability has been difficult to come by. That said, in non-core fixed income, US dollar high yield, preferred securities, those are the kinds of asset classes that we're recommending today as investors increase their yield, watching those inflation numbers and getting a real return.
And Todd, some investors have been getting their yield by simply parking it in cash and cash strategies. Do you think that pile of money that's been parked in that part of the market, do you think that starts to draw down? I know you guys have been funding some of your overweights with an underweight in cash.
That's correct. It was a great time to be a cash investor as rates were, again, moving higher and CDs and cash deposits became popular really all over the globe. Noticeably, however, you're starting to see as we get closer to rate cuts, that trade has moved. And I do think that you'll see investors shift towards short-term credits, reaching for yield again in high-yield preferred spaces. And a lot of those assets can flow through to the equity markets, where globally, I think investors have been overweight cash for a while. I think there's opportunities for equities to continue to run, particularly in the U.S., Japan, India, and select emerging markets.
Okay, so stick to what has done well in the Asia strategy. I'm just wondering, Japan we've seen a few corrections of late. Does that reflation trade still hold in that market? We just had a guest yesterday say it really all depends on the yen now.
The currency is extremely important, and inflation is extremely important in Japan. Going back decades, the message from Japan was difficult to manufacture inflation. Even cresting as high as 2.5%, 3% is enough to motivate consumers. And from an earnings revision perspective in local currency, you are starting to see, at least in yen, really rapid acceleration of earnings expectations across the Japanese market. It's been a difficult spot for investors for decades, but in the last several years, Japan has delivered the kind of growth that we've expected, and it's really at the center of a lot of Asian trade. It's part of the reason why we like Japanese equities.
Right. What are your biggest overweights in Japan, Todd?
Well, we make overweights in Japan essentially as you see opportunities arise, and what we do find is particularly in those value sectors, the industrials, the materials, those kinds of categories. Those are the sectors in Japan that we think will participate more broadly in the reacceleration across Asia.
Right. Your other big preference in the Asia Pacific in the equity complex is India. I guess you probably know you're not alone. You're not alone in that. What do you like the most right now, specifically in India at this point in the rally, and what are you avoiding there?
I like the momentum, and I'm very positive on the policy that we have seen after the election in India. They have an extremely young workforce, and as that policy, that pro-trade policy continues to hold, you're starting to see additional foreign direct investment and a unique performance pattern relative to China. I think one of the best features of an Indian equity investment is the differentiated performance pattern, the low correlation, and what that yields in terms of portfolio construction for Asian equity investors.
Yeah, I mean, Japan, India certainly did benefit from, I guess, the underperformance in China that we saw before the recent rally, I would say. So does that strategy still hold for the second half then? Your outlook on China, sir?
Yeah, indeed, we are underweight China today, overweight in India and a few other select emerging markets such as Korea, Singapore. We'll see how the third plenum unfolds, and we'll see what announcements are made. China's certainly had a difficult time with the housing market and then therefore land sales slowing. which has impacted local revenues significantly. We do expect the Chinese economy to continue to focus on quality growth with an emphasis on manufacturing. I would like to see, again, further earnings revisions, acceleration in China, stronger GDP growth in China. We're watching the market carefully, and certainly we will see opportunity in the world's second largest economy. It's just a matter of time.
Do you own anything in China, Todd?
Oh, yes. I think as a strategic allocation, it would be foolish for investors to ignore the opportunities that exist in China. Yes, we've had a difficult relative 18 to 24 months. But that should not dissuade investors from owning a strategic position in China. And in particular, the valuations can be very attractive. We do like those strategic holdings. It's more of a tactical underweight that may make sense for investors today. I would not abandon, again, a market that has incredible opportunity, great long-term growth. It's just a matter, I think, of re-accelerating the economy, and we'll look for policy to drive those decisions.
And most are not really expecting too much in terms of policy in this third plenum. It's a very low bar, Todd. I'm just wondering, what could be a positive surprise that could come out?
We could see additional support, I think, for revenue sharing and thinking about how revenues and tax receipts flow between the federal entity and the state and local entities. I think that's one policy that we could see come out of this. But no, we're not expecting a large-scale wholesale policy acceleration in China. What could do it, however, might be an equity market rally. That is the thing to watch. It's possible that you could see coming out of the third plenum a bit of agreement that an equity rally in China could benefit that economy, investors, confidence. If that becomes part of policy, that's something to watch and could offer opportunity for all types of investors across the market.
Todd, thank you so much for your time. Todd Jablonski there, Global Head of Multi-Assets and also quantitative investments at Principal Asset Management. Speaking of China there, just to alert you guys on what's going on, the Beijing Stock Exchange 50 Index, that's the small caps gauge, of course, the newest one, in Beijing, up 4.7%. At one point, you don't see it on your screens. If you do an intraday candle, that gets you up all the way to over 6% or as much as 6% as well. We're trying to figure out what's going on, but in terms of price, that's playing out in this specific index. Although if you look broadly at the other small cap gauges, that seems to be for now exclusive to that group of stocks there in Beijing, the most since February at this point in time. So there is one part of the market that's doing very well today.
Yep. All right. Still ahead on the China show. TSMC in the spotlight with Donald Trump questioning Washington's duty to defend Taiwan ahead of the chip makers' earnings that are out tomorrow. We'll have a preview coming up next. This is Bloomberg. Japan's Minister for Digital Transformation says China's growing tech ambitions have become a concern. Taro Kono had previously served as Japan's foreign minister during Donald Trump's presidency, and he spoke exclusively to Bloomberg about how Japan is bracing for the November election results and why G20 countries must work together to encourage Beijing to toe the line.
We are closely monitoring situation in the United States. We don't know who's going to be the winner in November, but Japan needs to be prepared for whoever wins the election. We need to do more business with the United States, not just the economy, security, others. So.
Bloomberg just had a conversation with President Trump, and it was really interesting when my colleagues asked about global competitiveness. The first thing that he talked about was the currency problem and how he fought hard against then Prime Minister Shinzo Abe. Do you think that could be a problem?
Well, the currency is a problem for Japan. The yen's too cheap, and we need to bring it back. So the way President Trump looking at, the way we are looking at, is probably the same way.
When it comes to cheap Japanese yen, it also helps in a way your tech exports, right? You're a tech powerhouse. How do you use that prowess in order to achieve your geopolitical goals?
Well, it used to be weak yen promote export out of Japan. But now so many Japanese corporations manufacturing in outside of Japan. So cheap yen doesn't increase the quantity. When they send the profit back to Japan, convert it into yen, it get bigger. But those money are reinvested in outside of Japan. So I don't think Japan welcomes cheap yen. I think we need to create a strong yen to support life in Japan.
How much has that to do with the Bank of Japan itself?
Well, the Bank of Japan need to increase interest rate, and they are still afraid of not deflation, but bring the economy down. But I think the lower interest lead to the weak yen, and that push up the price in Japan. And, you know, the Japanese are aging. The average age of the Japanese 49. So there are so many people living on the pension, the fixed income. So stronger yen will reduce the cost for energy and food. So that's what we need to be looking at.
As a digital minister, of course, you look at technological advances for the country. Do you look at China and perhaps their ambitions in the tech industry as a concern?
Yes, it is. When we welcomed China into WTO system, we thought they would be a good player according to the rules. Well, it didn't go that way. So we really need to be paying attention to what China does domestically, and we need to be prepared to, well, work together if that is possible, but if they're doing something out of the rule, we need to counter their movement. So I think US, Japan, Europe, other G7, G20 country need to work closely.
That was the Japanese Minister for Digital Transformation, I'm having trouble speaking, Taro Kono, speaking exclusively with, of course, Sherry over there in Tokyo, where we are headed into the lunch break. So we'll talk you through some of the big market moves in Tokyo and elsewhere. You have some big movers in Taiwan. Travel stocks are gaining, and we'll tell you why after this short break. This is Bloomberg. Right, welcome back. The Chinese central bank is lining up billions of government bonds it could sell to prevent a bubble from forming in the country's $4 trillion FX debt market, to be more specific. Let's bring on our FX and rates reporter Tanya Chen is here with us to talk us through what we should make about this hedge fund-like tactics of the central bank.
Yeah, I mean, it's very unusual. In fact, all the economists we've spoken to, none of them have seen this practice take place. I mean, we know other central banks in the past have used bond buying, bond selling as a standard policy tool. But what makes this particularly unusual for the PBOC is that, they're doing it at a time when it's, deflation. Also, the other thing is economists are saying that there is a common denominator around kind of what the PBOC is doing around sort of short selling these bonds. And usually when you see it with the Bank of Japan, the ECB, when they were doing these QE, QT tactics, they were trying to basically manage a monetary policy error. And you're kind of seeing that again play out in the PBOC. One economist we spoke to, Brad Setzer with the Council on Foreign Relations, I thought he made a really good point saying that the PBOC, if you look at what they're targeting, maybe it's not inflation is not their mandate, right? They're also potentially not an independently run central bank. So there's a lot of factors that are playing out with this, but it's an interesting one to watch.
Yeah, if that's not their mandate, what are going to be the driving forces then?
Yeah, I mean, that's, I think, what has driven the 6-month bond bubble, right? I mean, the market sentiment has been basically shifting towards what exactly the PBOC is trying to prioritize. And the reason why we're sort of seeing this monetary policy error play out by seeing like a very flat yield curve is because they've withheld from doing any sort of interest rate cuts. And with any, conventional central bank at this point, you would be slashing rates. They're doing this because they're trying to prioritize currency depreciation. And then on the other flip side of this, you've got the market forces around the retail investors and the households and the corporates. They have less and less to invest in, right? I mean, if you look at stock market, you look at real estate, home prices, mortgage loans, all of this is not looking that attractive. So you've got this 2% yield on government bonds, which doesn't look that bad.
All right. Tanya, thank you. Tanya Chen there, FX and rates reporter, joining us there. On the PBOC, we're checking some tourism stocks in Taiwan, in particular, that are actually moving this morning here. So steering away from the tech space in particular, but watching what happened here at the legislature, their approval of a non-binding resolution requesting the ruling administration to lift its restriction on group travel to China. So this is what we're hearing from local news there. So you're seeing the likes of, there you go, China Airlines is up 1.5%, as well as some of these travel services agents the like here today.
Phoenix Tours.
Yes.
There we go, 1.7%. Okay, we're going into the Tokyo lunch break right now, and well, the conversation is, since this time yesterday, was we kind of now know, without any confirmation, of course, that is, that they may have intervened on Friday based on the BOJ's accounts. This is Bloomberg.
Okay. 11:29 a.m. in Tokyo. We're heading to lunch break here and not seeing a whole lot of movement when it comes to Nikkei here this morning. We're basically flat on that benchmark. Topics, though, doing a little bit better. Dollar yen unchanged here right now as well, 158.44. And, really, it's been quiet in Japan. But, yes, as you say, it looks likely that they did intervene.
Yeah.
On Friday.
Well, either that or they spent a lot of money on bubble tea. But certainly you look at, there has been a big difference in some of the BOJ. And of course, we will be getting the confirmation on this end of the month with the Minister of Finance, who then orders that. But, I mean, price action suggests, and again, this is not a confirmation of any intervention.
No.
It does just look that they spent their money on something big on Friday. Anyway, 158.43 here on dollar yen. Right now. Now, the other big story across the region, too, is a couple of things, right? You are getting a rally today in Chinese tech shares after 2 days of declines. We're up 1% on the HS Tech gauge, as you can see on your bottom of your screens. You had New Zealand's inflation coming in below expectations, just about a notch below the median forecast, taking that inflation conversation to about a 3-year low, and not to mention to slowing inflation in Canada. So this inflation conversation, including, of course, in the U.S., and comments coming out of Jay Powell this week, do suggest that things are coalescing into a more dovish sort of paradigm on the spectrum. Right. Other things we're looking at here as well. So you are looking at volumes on the lighter side of things. I think we're about 10-15% lighter than usual on a regional benchmark. I'm curious to see how that broadening out in the tech rally that really took place overnight continues into the U.S. session midweek, with the Russell 2000 massively outperforming where you are on the Nasdaq index.
Yeah. It's been up, more than 10% over the last 5 sessions.
Yeah.
I think it's the best streak we've seen in some time, and really outperforming the S&P. So certainly we saw that after the inflation print that came out. And then yesterday, is there any sort of staying power? I think, the guests that we talked to today say maybe not right now. Or maybe I think Principal did say maybe we could see more of a broadening out in this rally here. Yeah. But earnings are going to be what's driving that, not valuations. Yeah, and
coming up, you have NVIDIA, I think, in a couple of weeks. You have some key earnings. We're done with the U.S. banks, for example, and we move into, of course, your large caps.
Yeah.
And, the notion that some of these, to some extent, the Mag 7 did represent a hedge in a defensive trade, given all the uncertainty, right? Hence why gold is up, for example. But I guess if you take a step back and look at valuations and you look at the growth rates some of these companies are still reporting, we're still looking at double-digit moves, if not high double-digit moves. And I think that takes us into, I think ASML is reporting today out of Europe. I could be mistaken there. TSMC, I believe, is reporting tomorrow or... Tomorrow, yeah. There we go. And, we're baking in a geopolitical overlay to this, right, with Donald Trump's comments in that Business Week interview we did, and how he phrased, not so much fundamentally changed the Taiwan question, but how he phrased what they should be doing. They should be paying up for a U.S. defense policy.
Almost like an insurance policy, right, that you have to pay to get that U.S. protection. And really, it became more of a resentment on what the chip sector has done, and basically Taiwan has gotten very wealthy in that. So it talks a little bit more about just why his foreign policy is very transactional in some ways. We're hearing in this hour from the Taiwan premier, Cho Jun-tai, talking a little more about this reaction to this Trump interview, and he did mention that Taiwan-U.S. ties have been solid in recent years, so they're still holding to that commitment here at the moment. Of course, that brings us to a lot more when it comes to geopolitics and what this all means. Of course, Trumponomics is one thing, but also their take on foreign policy. Let's bring in our next guest. Joining us there, Warwick Powell, Queensland University of Technology adjunct professor, is here with us. Warwick, it's good to have you back on the show. it's interesting. Maybe we learn a little bit more about Trumponomics, how his view is on foreign policy. It looks like the protectionist hawks is still very much, that stance is still there. When you take a look at a Trump and Vance ticket now, how does China look at that?
Look, in many respects, it's going to be a case of the more things change, the more things stay the same. The general posture of the US towards China over the course of the last 7 or 8 years has largely been a process of progressive intensification of various forms of hostilities, particularly in relation to sanctions and assorted trade prohibitions. So I think first and foremost it will be seen as a case of the more things change, the more they seem to stay the same.
Okay, do you think this furthers this broader exercise that we're seeing in China of self-reliance, dual circulation, for example, that they can't rely simply on exports? And I have to note, exports have been a key driver of growth this year so far. How do you think, what does this mean, implications from a broad economic policy perspective, Warwick?
Look, I think we've got to actually understand this question of what drives China's economy, and it's actually principally driven by the domestic economy. 78% of GDP has been underpinned by consumption growth. The remainder of it is largely being driven by fixed capital investment. So the Chinese economy is, contrary to popular beliefs, is not a particularly export-oriented one. That's the first thing to actually bear in mind. The second thing to bear in mind, though, nonetheless, when it comes to trade, is that the Chinese economy over the course of the last 10 to 12 years has progressively changed the spatial orientation of its trading relationships, so much so that its trade relationships with the Belt and Road Initiative countries and the Global South, broadly speaking, now exceeds the trade it does with the traditional markets of Japan, the EU and the United States. So the traditional markets of the wealthier countries are relatively less important today than they've ever been before. In that regard, China's ongoing structural changes, the driving forces behind its current wave of high-tech industrialization, I think is likely to see that pattern continue. Unfortunately, that doesn't change the position for the US. The US remains highly dependent on Chinese manufactured goods, not only for final products, for consumer products, but critically in terms of any ambitions for reindustrialization are concerned, for intermediate goods and capital goods needed for factories themselves.
So how do you look at after this election year then? I mean, obviously the U.S. is still, in terms of technological advances, still, a bit, I guess, more advanced than China in some ways. Does that gap actually narrow or widen more?
Look, I think the gap's been narrowing for quite some time. The last few years of prohibitions in relation to semiconductors has catalysed a significant commitment from Chinese enterprises, Chinese finance and government to build a domestic capacity. And we're starting to see that play out, not only in the obviously highly visible examples of the Huawei devices that have been launched over the last 6 months or so, but also in terms of China's own semiconductor industry's increasing footprint in so-called legacy chips. So the gap in many regards is already closing. That's not to say that there aren't areas where the United States remains a leader in technology narrowly defined. The key, though, and this is a real difference, I guess, is that the Chinese political economy has been very focused on applied technologies, which means that it's taking a lot of the technological advances that have been achieved to date and embedding them right through the social and economic system. And that's actually where China's at in terms of being a significant leader in making use of technologies.
Right, and one of the big stories that I actually wish that we could be spending more time on, and certainly I think it's a conversation worth having longer term, is the ecosystem that, because these walls have been erected, within the Chinese tech space, a lot of these, like AI, for example, EVs, robo-taxis, a lot of these technologies are being developed domestically, where you have a lot of these big domestic players just warring it out and just seeing who comes out stronger. And I'm wondering, you think this model, do you think this churns out even better Chinese technology and applications, to your point there?
Look, as I think you and all of your viewers will know, the competitive levels in the Chinese domestic economy are intense, and areas such as the new energy vehicles is a classic case in point where price competition and the need to bring new products and new models with new features to market quickly is really transforming the ways in which industrial systems actually work. So in that sense, it is creating some very lean and very, very adaptive enterprises making use of new automation technologies to bring products to market quickly at incredibly low prices. The other thing to bear in mind in relation to this process is that these dynamics are delivering to the world for the first time technologies in a whole range of areas at prices never seen before. So what's happening as a result of the intense competition, plus the ecosystem developments that have taken place in China over the last decade or so, is an economic model that is pricing people in through abundance as opposed to more traditional models of pricing people out through confected scarcity.
Warwick, I want to get more on this interview that we did with the former President Trump when it comes to his comments on Taiwan and basically saying that, you know, they took the chip business away from us and then the Taiwanese have gotten very wealthy and that basically that he was not too supportive of the idea of defending Taiwan from any sort of China aggression. I mean, if I was a TSMC or a chip company in Taiwan, how should I be looking at a statement like that?
Well, I think it behoves everybody to think hard and seriously about what it is that can bring stability to cross-strait relationships and dynamics, not just in the short term, which obviously is what everybody is concerned about, but also across the medium to longer terms. And I guess the transactional nature of President Trump's comments opens up the need for all players to really reconsider what it is that they want to accomplish over time and how it is that the different concerns and interests can be mediated to achieve a reasonable consensus that is acceptable more or less all round without bloodshed.
Right. Warwick, just very quickly then, I mean, very, very quickly, does Trump change anything that hasn't already taken place under Biden? On Taiwan,
I think there is a little bit less ideology, a little bit less moralizing, and a lot more transactions. So I think that there is an important difference in terms of the general tenor and the general attitudes towards relationships between America and the rest of the world and perceptions about what America's role should be. We're moving potentially from an environment where the American leadership view of itself is driven by an ideological imperative to be a liberator and the bearer of freedom and democracy and all those sorts of things, to one that is a lot more focused on transactional considerations.
Warwick, thank you so much. Warwick Powell there, adjunct professor at Queensland University of Technology. We got plenty more ahead. This is Bloomberg.
Right, welcome back. You're watching the China Show. So, you know, this conversation around is the rally in tech broadening out beyond this, you know, your simple chip names, and you could literally count that in 5. I mean 10 if you're up that spectrum. But so the next couple of day or two is going to be extremely important because you have TSMC that reports, I believe, tomorrow. And over in Europe, in a couple of hours, it's ASML, of course, which is the one that makes the chips. And of course, we're looking at second quarter results out of ASML. That's out, as we mentioned, of course, going into the European session, which is just a few hours away. Now, Bloomberg Intelligence senior analyst Masahiro Wakasugi is with us right now to talk us through and what to expect when those numbers come out. And, you know, Masahiro, what will be the most important point when these numbers come out? What do I need to be focused on as a flurry of headlines drops on my terminal?
Yes, maybe in terms of the results, ASML is now expecting second quarter revenue to be around 6 billion euro, and the consensus is also around 6 billion euro. So we have to check if the revenue achieve that kind of number. And also, if we look at the operating profit, probably the based on the guidance, 1.65 billion euro or maybe 1.7 billion euro should be expected. So these numbers should be important. And also, more importantly, recently markets are looking at order bookings for ASML, which is a pretty lumpy recently. So probably the second quarter order booking should be around, say, 4.5 billion euro or around the order bookings above, say, 5 billion, yeah.
Okay, yeah, Masahiro, well, in terms of the guidance, though, so once a report, what do you think on the guidance front will be most important?
Yes, ASML already expect this year's revenue to be up around maybe almost flattish. So in that sense, maybe third quarter revenue, maybe we require around, say, 7.5 billion euro. That kind of number is necessary, to achieve full year revenue going forward. So. And so that kind of revenue guidance, midpoint revenue guidance 7.5 or that kind of revenue should be very important. So also maybe EUV demand outlook or maybe DUV outlook or China related demand outlook should be very important.
All right, the big ones tomorrow, TSMC here in this part of the world. Masa, I'm just wondering, what do they have to deliver to justify this massive rally we see in the stock?
Yes, maybe the TSMC already reported the April monthly revenue for the June quarter, so we don't see very surprising results. And maybe same as some other company, TSMC also expect the 2024 revenue number up, say, low 20s or mid 20% revenue increase. So we have to see if TSMC maintains that kind of revenue forecast, because TSMC has a pretty big customer, Apple or Nvidia or MediaTek. So we can see the demand strength from Apple or Nvidia or MediaTek, which is related with the Chinese smartphones. So I think that the TSMC's revenue guidance should be very important. And at the same time, TSMC may raise capex number, or maybe they may maintain capex number. That kind of capex number should be also very important for TSMC guidance.
Masahiro Wakatsugi there, Bloomberg Intelligence, Asia senior tech analyst in Tokyo for us. Right, just back to China here. So the PBOC, this is based on our reporting and people familiar with what's going on. So the PBOC has started, again, a fresh round of questioning around the banks as it looks to cool this rally. And as you can see, bond yields are headed down again, which has really been the easiest the path of least resistance here. So local branches of the PBOC have sent inquiries to regional lenders in at least 3 provinces, including Zhejiang, Jiangsu, and Jilin, asking about what their positions are, outstanding positions in the bond markets, holding structures, leverage, which I guess in some ways is basically, I think in one way, PBOC looking at what the exposure of banks is in case this market turns, and also the inventory question of how much it's actually holding. The central bank has said it had hundreds of billions of CGBs in case they needed to sell into this rally. More details on your Bloomberg terminal on this breaking news that just dropped, of course, on your screens. Plenty more ahead. This is Bloomberg.
Some stories that we're tracking for you this morning. Well, Hang Seng is flat here, and not much movement when it comes to some of these Asia stocks here this morning here. So in terms of what we're focusing on is the exiled Chinese tycoon Guo Wengui has been convicted in the U.S. of duping investors out of $1 billion to fund his luxury lifestyle. Also known as Miles Guo, he was convicted of fraud and racketeering conspiracy. Guo gained notoriety for his crusade against China's Communist Party, attracting allies including Donald Trump associate Steve Bannon. Nomura is reshuffling its Asia investment banking team and cutting jobs, trying to reduce costs amid a deal slump in China and Hong Kong. The Asia ex-Japan team head Patrick Kwan is leaving after more than 2 years in the role, and sources say that coincides with a new round of job cuts involving about 10 bankers this week, including at least 3 managing directors. South Korea's Kakao has reportedly decided to sell most of its units, including Kakao Games, Kakao Entertainment, SNS, and SM Entertainment. The Donghue newspaper report cites that an unidentified industry sources saying that the company will keep some core units, including Kakao Bank. The report says the restructuring is aimed at improving corporate governance. BHP says it shipped over 69 million tons of iron ore in the second quarter. That is in line with its annual production guidance and takes its full-year output to nearly 260 million tons. The world's largest miner says demand for the key steelmaking material remains subdued in China due to its troubled property sector.
Yeah, speaking of, a couple of things here. So we're going through solar stocks, crypto, gold, among the sector movers. We'll start things off, though, with, why not? Let's start things out with solar stocks, jumping at this $3 billion. And we know, by the way, this coming together of the business community between China and the Middle East. And we have a number, $3 billion, on some of the capacity the Chinese firms are looking to put up in Saudi Arabia. We're up in the order of about 1 to 3%, based at least on some of the conversations here. Some of the stocks on your screens. Now, I think we should have... do we have the Shanghai State Firms board, please, if we can, because that's really on the back of Shanghai urging markets value. There we go. Yeah, here we go. We're up 5 to 10% on this specific story. We promised you gold and crypto, and here's what we're seeing on those fronts.
Yep. So it looks like those are some of the these new Trump trades, and we're watching very closely that crypto story, Bitcoin and the like, on whether we can see this rally continuing here. We've seen basically Bitcoin has been pretty much seeing some pretty steep ascents here of late. Nice. There you go. And we continue to see these crypto stocks really benefiting gold miners as well. Look at Evolution Mining. West Africa Resources is up some 4% here right now. So it's part of the Trump, I guess you could say it's part of the Trump trade, but then, with the whole, more conviction in this market about the Fed possibly being able to cut in September, that certainly is helping the likes of gold here today as well.
Yeah. As many of our guests have pointed out, right, these two things have taken place at the same time,
yeah.
Trump and Powell. So to disentangle the two will give you alpha, I guess. Or if you can write both, anyway. Do we need to find a reason all the time for something? It's we're in the business of news, and certainly in our case, sometimes it's difficult when things move. We don't know why. Here's one interesting story, though. Nongfu Spring. So the story here was Monday. A consumer council report said that there might be some problems with the water.
Level of bromate in its water products.
Higher levels of bromate.
Yes.
And then the company said, hey, here's a legal letter. Please apologize and clarify your misleading report. To which the company, the council then said, you know what? Your water's safe to drink. Shares were down yesterday. We're up almost by the same amount today, 2.5%, going into the last hour of trading. Global macro movers for you. Let's get it up, please, if we can. If we don't, I promise you in a couple of minutes, the Bloomberg Markets Asia will show you global macro movers. This is the China Show.